Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends, and predictions about the future of payments.
Hello and welcome to this episode of the Navigating Digital Payments podcast. I'm David Daly. I look after the scientific community here at Worldline, and I'm really excited because we've got a bonus episode today. We're joined by TrueLedger, who are one of the winners of the ePayments Challenge social media contest. So we've got an interview lined up with Jan Ellebrock, who is the co-founder and CEO of TrueLedger, and we're going to be discussing this question of will digital contracts conquer the wider economy? Jan, welcome to the podcast.
Thank you so much. Glad to be here.
Super. It's great to have you here too. And we're also joined today by Ina Kostyuk, who is our global partner manager for the merchant services part of the Worldline business. Ina, great to have you here too.
Hello, everybody. Very happy to join you.
So I thought in this episode, it would be great, first of all, to understand a bit more about TrueLedger, what you saw as the need for digital contracts. Then, Ina, you can give us some insight into what else is happening around this space in payments. And then I'm also really interested to hear, Jan, from you, how you found the ePayments Challenge, and maybe also some of your thoughts about the trends we're going to be seeing in the future. So perhaps we make a start then, and I just ask you, what problem was it that you saw in the market that led you to set up TrueLedger?
Yes, the problem was actually relatively simple. External employees such as consultants, IT developers, legal services, business process outsourcing and the like, today they make up for about 30% of a company's workforce and about 42% of the cost of labor. But we still deal with the inherent problem that the incentives of buyers and vendors are very often not aligned. Buyers want to ultimately get a job well done at a fair price. Vendors have different KPIs such as revenues, billability, profitability. And so the outcome, unfortunately, is a relationship which is very often defined more by the need to collaborate than actually by a true desire to do so. And we have seen a few interviews with executives who show that actually 75% of them report low visibility in the quality and the progress of externals, and 41% of them even report maverick spent by externals. Companies typically react in these situations by tightening their governance and controls. But unfortunately, that only creates excessive administrative effort and nurtures the culture of distrust even further.
And if you, in your view, is that something that's becoming even more challenging because companies are using externals more? I'm thinking a little bit of the kind of rise in the gig economy, but also, it maybe used to be the case that people would have a job for life. You'd work at one company, your career would be doing the same role, the same function for 50 years, and then you retire. And now I think the whole labor market is just not like that anymore, is it?
Yes, that is one trend that's absolutely important. The second trend is that companies all are in a transformation phase. We live in a digital age. So in many cases, externals do bring competencies to the table that they actually don't have themselves. So using external is no longer a choice. It's actually something you are required to do in order to succeed in your own core business. So we see market shares growing. We see overall the markets growing of externals. And we also see this ratio of 30% to actually go up much rather than stabilize or go down.
And indeed, it's expected to within the next 3 to 5 years to get up to 50% of freelance and contractors in the companies in a different fields.
Wow, so it's grown a lot and it's going to continue to grow. And I guess coming back to what you said, Yad, about governance and structures in organizations, lots of those have been set up in a world that was totally different in terms of how we worked and how we brought people into the company to do things.
Exactly, and that's what we hear from providers, that they say their pain point of getting to business dealings with their customers, especially the larger ones, have become almost unbearable. The amount of information requests they have to fulfill, how they need to structure their information into something that their clients are ready to understand and digest, is becoming an administrative burden, where some have even gone back to their clients and have raised prices by 5%, simply for the reason that they felt that the administrative effort that's being created on top of the actual collaboration is becoming unbearable.
And if I can ask, so in that case, the True Ledger provides more service for the big company who are searching for the special skills people, or to a separate company like HR recruiting company who are placing these high professional specialized professionals in such company and work on a like freelance project base. Who you're really targeting?
So ultimately, we are here really for both parties. We are a neutral platform. We manage the contractual relationship on a day-to-day basis as a neutral instance. That's a very important part of how we have designed the solution, how we think we can achieve the targets of a better collaboration. So it's really both. We see the buyers who want to have more control and more transparency and understand much better what's going on. But we also have vendors who are actually trying to achieve the very same thing. They want to be convincing that they have a good solution to their customers, that their way of working is actually trustworthy, and that this bad feeling that I spoke about earlier is actually not justified. So they have a strong interest as well. And another aspect is that we see by now with especially the larger providers already ratios of 50% and more of their contracts containing some sort of success-based component. So you give a discount, or you get an additional bonus in case your project does not go as planned or actually meets or exceeds targets. And what that does is it moves away from a classic billing mechanism where you say, I worked 5 hours and now you pay me for 5 hours, to a billing where we said we had a project and we had a fantastic success here. And because of that, I participate in the success. But if I fail, I'm also willing to sacrifice some of my own revenues and my own profitability. And this is something which our solution is extremely good in managing and providing still perfect transparency to both sides and perfect accounting afterwards by the end of the collaboration.
So that, I think, is really interesting, moving away from hours worked to more a shared pain or shared gain model. Can you say a bit more, Jan, about how your platform achieves that and supports that?
So we have multiple things that can be agreed as part of a engagement when you set it up. The simplest form would be to say, hey, we have committed to do this for a budget for 500,000. Now, like any consumption-based service, this is where smart contracting has its biggest value proposition. We all know today that many of these engagements are signed for 500,000, but the actual bill is 700,000 or a million. And clients often get surprised by these developments. So one very simple way to show commitment as a vendor is to say, hey, I'm going to actually give you a discount of, 25, 30% for every day hour I need to work in excess of this budget that we committed to would be sufficient to achieve that target. That's a very simple mechanism. It is much more effective than, let's say, just putting a cost ceiling, because that's something which is usually changes the discussion over price to a discussion over scope. But to just say, we don't know the outcome, there is risk out there, we commit to it, this is what we think it'll take. If it takes more, we share the pain of getting to the finish line, but the commitment is there for both sides to achieve it. And there's plenty of these mechanisms which can become increasingly more complex and increasingly more sophisticated. We have identified there's about 40 of them in total, and we are on track to supporting all 40 of them as we continue to evolve with our solution over the coming years.
It seems that we're getting to the point of programmable money. I would like to go a bit on a further of programmable money. And when the smart contract been born, and actually it's been thanks to Vitaly Buterin, who been participating initially in the development of Bitcoin, and then he wanted to implement the kind of a smart contract or programmable money deduction already in Bitcoin as a cryptocurrency, but that was not really welcomed by his community. So that's why he decided to make Ethereum, and he launched it in 2014. So it's kind of innovative, and how would you comment it on European scale about use cases of smart contract?
So you're absolutely right that smart contracting generally is something that is on the rise, and especially in any area where we have usage-based scenarios. So we're at the point in time where we decide two partners decide to engage in any sort of commercial contracts, and they don't know exactly yet what the usage of that contract will be, that smart contracting has just a tremendous effort. So this is really, I think, a proven use case by now as a general one. And I think the nice thing now of companies like ours, but certainly there are also others, is to explore use cases that have so far not been touched, that are also consumption-based, that also have these risks into the future, and be able to bring solutions to those kind of use cases and those kind of users to also apply smart contracting in their particular situation. And the benefits speak for themselves, and I think that's really, in my opinion, the big success and the big promise that we see, that smart contracting does have an incredible value for both participants on either side when it comes to all sorts of additional things that they otherwise need to manage with a lot of effort. And so I personally am convinced that this is the future, and this is the journey that we're going to see going forward. Use case by use case by case, we see the number of smart contracts being used growing.
And Jan, maybe just for the benefit of our listeners, could you give the simplest, easiest to understand explanation of a smart contract for those who may not be so familiar with the term?
Yes, a smart contract, or as also people call it, a computed contract, is ultimately a contractual agreement where the terms and conditions are fully machine defined, and a computer knows them perfectly, deterministically. I think that's also very important. And then based on the subsequent transactions that are being recorded and agreed as valid transactions, the contract is able to generate an automatic account statement, invoice, call it whatever you want to call it, that ultimately says, based on the contract, based on the fulfillment that has happened, this is the amount that A owes to B. And that is something which is undisputed. It is transparent in real time. And also, obviously, it allows to do any sort of intermediate status, forecast, projections, all these things that you often need in order to manage your commercials as a company, whether it's as a buyer because you want to know what your costs are, or as a vendor because you want to understand your revenues. So this is what computed contracting or smart contracting does as functionality.
But I do find there was a thanks as well, Jan, for the really clear explanation. But I think did you call them codified contracts? But I think it's sometimes I think smart contracts seems a bit vague, and well, what does that really mean? But thinking of them as executable contracts or codified contracts that can then automatically trigger things like payments is I think a really clear way of understanding it. So Jan, perhaps you can build a little bit on that thought about the payment part being fully automated.
Yes, and in our recent discussions actually with Worldline around the e-payments challenge and the partners, it became very obviously that the B2B payments automation is still severely hindered by the prior step in the value chain, which is invoice management. and that step is still a huge struggle because invoices need to be validated as coming from a viable source, complying with contractual agreements, corresponding to services actually delivered, being no duplicate or fraud, and so on. And with computed contracting, we create invoices that are guaranteed to be correct, which means that the whole process will literally disappear, and payment handling can suddenly be fully automated. A side aspect that we also looked at is the fact that liquidity and cash flow management becomes much easier because we can precisely forecast projections on a daily basis long time before any invoices arrive. So here again is another great benefit that computed contracting has.
I do want to, because you were part of the e-payments challenge that Worldline ran at the end of January, I did just want to change the subject slightly and just get your feedback, your very brief thoughts on how that experience was for you and how you found that.
Yes, and that was really an absolutely phenomenal experience. And for me, certainly the most impressive takeaway was to see how serious and committed Worldline is about being an innovation engine. So the focus was really entirely on collaborating with fintechs to present new value propositions to Worldline's clients. And not in the distant future, maybe in 10 years, but right now. And so that to see that and see how that unfolded and see how basically also this mindset was driven throughout the entire event, but also in the actions before and the actions after, for me was very inspiring. And certainly we were very glad to be part of that event.
Yeah, and people are not going to believe that before we started recording, I said you don't have to give a pitch and you should give completely honest feedback. But I mean, that is great to hear. And it reinforces my experience of the culture we have at Worldline, is that we are actually very interested to work with other companies and other partners to, particularly when we're looking at innovation and new solutions and new directions to take. So I mean, that's obviously brilliant feedback to hear. And then perhaps just the final thing that I wanted to pick your brains about was future trends and what you think could be an important trend that maybe is not so looked at today, people are not paying attention to, but that could become important in the future.
So personally, I think that is collaboration. And let me explain to you a little bit what I mean by that. We tend to market, our solutions and our achievements a lot for being great in automation, in integration, in precision, which is obviously very important. But in my opinion, the secret sauce for success is the fact that we humanize the collaboration and the communication in a way that people actually love to interact with the technology that we built for them, and they don't feel isolated or controlled by it. So for us, when we designed TrueLedger, that was a really important design principle, which we thoroughly applied really throughout the entire solution. And we found many ways where we could substitute rather complex controlling processes with much simpler steps that are more collaboration oriented. And so I'm a very strong believer that collaboration is a key differentiating factor going forward.
I also believer of collaboration, and I'm really glad, Jan, you mentioned it, because indeed, mainly people talk about like technology or innovation or really complete change of business model. But I also believe that the future after the soft skills and the ability of people to connect, to understand each other, to demonstrate empathy, to agree to disagree. And this is very well explained in one word as collaboration. So thank you for that.
And it reminds me as well of a conversation I had a long time ago with someone who worked in the field of collaboration. And he was saying, collaboration is not one person does one thing and then they hand it over to another person who does something and then they hand it over to another person. And collaboration is not I produce something and then someone else reviews and approves it. Collaboration is where you really have people together and the interactions between them generate something that wouldn't have appeared or materialized without the people really interacting together closely. And the other thing, which I think is great, Jan, how you say that you've integrated this into the way that you're building the product, is I think it's such a mistake to believe that collaboration is just a tool, just a kind of a software product, or you install Microsoft Teams or something and instantly you have collaboration. And lots of these things are called collaboration tools. But I think often there is more to it than that. Do you have any, reflections on that?
So my reflections are that when you design a solution, that as you basically go through the various options that you always have at hand in terms of how do I design process X, process Y, interface A, interface B, that in this moment you take consciously or unconsciously a lot of choices if you're in the tech space on how you expect people to interact, how much you expect people to trust each other, how much you expect people to talk to each other, how much you expect people to actually try to be transparent and forthcoming versus maybe trying to hide things from you or stay away from a direct interaction. And the many choices that you can take in those details actually make a huge difference in what solutions you create and what kind of collaboration you ultimately also advertise with the solutions you put in place. And here I think we have not spent enough time and energy in the past focusing on that. We have too much focused on making sure that things are right or making sure that things are properly controlled, creating often or sometimes solutions that have maybe everything right from a solution perspective, but maybe are then not used as much as they should have because it's just not fun to interact with them. It's just not a positive experience to deal with such a tool. And so that's really something where I fully agree with you. Putting the tool in front of somebody does not automatically create collaboration. It's always the connection between the technology and the human beings. But at the same time, when you design a tool like Teams or like any other tool, do you have already in mind that how do you, in the details of the collaboration, how do you actually allow and empower people to deal with each other or not? To stay with Teams, it's a very simple example. Is the microphone open when everybody connects, or is the microphone closed and a central person needs to let me into the meeting? Or do I trust that people come together with the right intentions at the right point? And obviously there is different solutions for different scenarios, but those basic principles will immediately form a different culture using a collaboration tool as the example that you just gave.
Super. So thanks, Jan. I think we've covered a lot of ground there. I guess if we come back to that question of will digital contracts conquer the wider economy, I think it seems like the answer, it has a lot of potential. Clearly, it's more advanced in some sectors than others, and in some geographies, the use case is more obvious, as you were saying, Ina, than in others. But it does seem like it could. I guess the trick is finding out where the benefits are of applying digital contracts and then doing it in a way that really makes it easy, intuitive, and fast for companies and individuals to adopt. So I think that's been really interesting. Jan, really want to thank you for joining us for this podcast.
Thank you, guys. It's been a great pleasure.
Ina, it's been great to have you here too.
Thank you. I really appreciate it. It was an interesting discussion.
Likewise. And just to let the listeners know, our next regular episode, we will be discussing with David Carney the topic of will digital currencies take over the world? If you would like to contact us, propose other topics to discuss, give us any feedback, then you can email us on ndp-podcast@worldline.com. Please do take a moment to subscribe and leave us a review. And finally, of course, I want to thank you for listening to this episode of Navigating Digital Payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.